Hey, what's up, guys? This is Marseille, the property pastor, here with Kingdom Legacy Builders, where our mission is to help everyday people like you and me to build a lasting legacy for our children and our children's children using real estate and wealth building principles. And today I want to talk a little bit about how to work with a hard money lender. Now, a lot of folks have been hitting me up, asking me questions about, where do I find funds for my deals? I maybe got my first deal under my belt, and I found another deal, but I can't get the funds for it. And sometimes the subject comes up about hard money lenders. Now, I do a lot of deals through private money. I really love working with private money lenders, but I also use hard money from time to time. So today I want to talk a little bit about how do you work with a hard money lender, what a hard money lender is, how the loan is basically structured, what the terms are, where do you find them, all the things that you kind of need to know in order to actually engage. And also we're going to talk about what kind of deals fit or make sense for hard money for a hard money loan. Hey, but before we get started, make sure you hit that like button if you haven't done so already. If you're not subscribed to this channel, make sure you hit that subscribe button. We're dropping great content all the time to help you in your business, great tips, all sorts of tools and tips to help you in your business, sharing experiences and things like that. So make sure you hit that like button, make sure you hit that subscribe button, and then hit that share button too, because somebody else could benefit from this video. All right, so first of all, what is a hard money lender? Now, a hard money lender is basically the type of lender that's going to give you fast access to cash, and usually anywhere from days up to weeks. And they're going to give you fast access to cash so that you can close on the deal in a very short time frame. Whenever you go to your Wells Fargo, whenever you go to your Bank of America, it can take you 60 days to close a deal. Now, if you are working with a wholesaler, maybe you're going to a real estate auction, maybe you're just dealing with an off-market property where that seller wants to close very quickly, you're not going to be able to go and wait through underwriting. You're not going to be able to go and wait for funds to clear and go through all of these steps. You need to be able to move quickly. Oftentimes in a real estate transaction, cash is a great incentivizer, and having quick access to it is very important. Now, many people will hear the term being a cash buyer. Now, being a cash buyer does not mean that you've got, 100 grand just sitting in your pocket. It doesn't mean, you've got 200 grand sitting in your pocket. What it means is that you can close quickly with full funds. So what a hard money lender does is a hard money lender allows you to close very quickly and essentially act as a cash. So a hard money lender may lend actually 100% of the total project value. Oftentimes they're going to lend 80% or 90%, depending on the deal itself, depending on your experience and track record, and then oftentimes just depending on their actual terms. So that hard money lender, they're basically going to lend to you very quickly. They're going to lend to you, sometimes up 90%, even 100%, and they may lend on just the deal, and they also may lend for the repairs. So it really just kind of depends on the lender, depends on what you negotiate, and all those kind of things. So this sounds really good as you're looking at it, doesn't it? But there's always a catch with anything. So with a hard money lender, some of the drawbacks to a hard money lender are really going to be the price of convenience. Now, with a hard money lender, like I mentioned, they're going to get you money quickly. They're going to, typically loan if your deal is strong. They're going to give you, pretty good, a small down payment. But one of the things you got to be aware of is that you are really going to pay for that money. So oftentimes in terms of interest rates, most of the hard money lenders that I work with or deal with, they're gonna give me rates anywhere from 8% all the way up to 12%. But then they really get you with fees and points. So some of the closing costs, some of the transaction fees, but really a lot of times they hit you with points. So the points can range anywhere from 1% to 5%. Now, if you don't know what a point basically is, a percentage of the total loan amount. So if you have a $100,000 loan, 1 point, that would basically be $1,000. So you could be spending $1,000 to $5,000 on a $100K loan, depending on how many points that particular hard money lender charges you. So with it, right, you just got to keep those things in mind, because you're on the positive side, you're getting fast access to cash so that you can close deals. But on the negative side, right, you're going to have, it's expensive money. Now, on top of that, the loan terms are very short. Typically, a hard money lender is only going to loan you money for about 12 months. Now, because of that, you would not want to necessarily buy and hold property with a hard money loan, because with that property, you would be paying you could be paying 11% for years and years. Now, you really won't be able to cash flow at those kind of rates. So that becomes very problematic. So typically a hard money loan is a short-term 12-month or less type of loan, and it's going to be very expensive. Now, what happens after that 12-month period is if you were doing a flip, you would have sold the property. If you were doing a BRRRR deal, you would have refinanced the property. Now, what some people will do is if they've got just great equity built up in a deal, they know and they got to get into it quick, they'll just refinance it, at a very short amount of time. But you got to be really careful because if your traditional lender has seasoning periods and things like that, where they require you to hold on to the property for a year, and then you've only got a year to pay off that lender, that can be a very stressful situation and be something that really wouldn't fit for. So that being said, I believe that the best candidates for hard money loans are going to be fix and flips, where you're going to buy that property, fix it up, and then sell it. Also, I believe that BRRRR deals are pretty good candidates too, because you're going to be buying that property, and then after you buy it, you're going to fix it up. And instead of selling it, you're going to go ahead and put a tenant in there and then refinance, pay off the hard money lender, and move on to the next deal. Now, that can be a little bit tricky depending on the timing, depending on how long your rehab takes, depending on how long it takes you to find a tenant, and then particularly your lender that you're going to use to refinance if they have any kind of seasoning requirements. But I believe that BRRRR deals can work. I've used them before, and they worked out just fine. The only other time I would really use a hard money lender would be is if I had like a seller finance balloon and I had a lot of equity built into the deal. So if I had a lot of equity built into the deal, I recognize that, I'm going to basically be able to appraise at a pretty good value. I won't have to, and it's very similar to a BRRRR deal. The only difference is we didn't put any rehab into the project. So really those are the three primary deals that I think kind of work with hard money. I would never use hard money on a traditional purchase that I was going to try to hold on. Most typically your hard money lender is only going to loan to you for 12 months anyway. And if you don't have much equity in that deal and you go to refinance it, now you've spent a ton of money on closing costs. You've had to close basically twice, and you could come out of pocket on the negative side. And where do you find a hard money lender? So I like to start with my local network. So different real estate meetups that I may attend, they're typically going to have great recommendations for hard money lenders. You may even have hard money lenders that network at these same events that you can talk through. They kind of understand your market. If you want to kind of go broaden your scope, you can look on Bigger Pockets. They typically have, a decent range of hard money lenders that they recommend that are very investor friendly. You can read reviews on them and things like that nature, or you can just Google, right? You can just literally type in hard money lender, your area. It can be local, it can be statewide, it can even be nationwide. It really just depends on what your personal preference is. But hard money lenders are out there. They're not difficult to find, and you can definitely find one for your deal. Now, one thing that's beneficial, another benefit of a hard money lender is they really tend to focus a lot more on the deal itself, and they focus on your track record. They're not going to always be, so worried about your credit score, your personal finances, and those things. They will take them into consideration, but it's really about the deal with a hard money lender, and they are focused on working with real estate investors. So with a hard money lender, you're going to need to provide a breakdown of the deal itself, right? You're going to need to provide the purchase price. You'll need to provide the rehab scope of work. On top of that, you'll need to have an estimate of the ARV or after repair value. So they're really going to focus on that deal. But then on top of that, they're going to focus on you as well as an investor. They want to know your track record. So oftentimes it may not be the easiest to start with a hard money lender with no experience. Not saying it's impossible, but when you do, you may have a little bit more stringent requirements. They may charge you more points. They may not loan you quite as much. They want to see a rock solid deal. But if you got, more deals under your belt, you flip several houses, you got, decent sized portfolio, working with a hard money lender tends to be a little bit easier and a little bit more flexible. But really one of the benefits, another, lasting benefit of a hard money lender is that they're really focused on the deal and your experience as opposed to all of those, all the other red tape that you got to jump through while you're dealing with a traditional bank. So that's another tip, another tool I think that can help you in your business. If you want to find access to funds, you've got the deal, but maybe not the funds. You can't find a private money lender to lend you off to the side. A hard money lender can be a great way to go if it works, right? If you're doing a fix and flip, you're doing a BRRRR deal, or worst case, you got a really high equity type of deal that you're buying. I mean, I actually had a property I did that for. I bought it for like $40,000. It was really worth about $110. So I could have used a hard money lender very easily there. My original seller wanted to get paid off quickly in that type of situation. That time I used seller finance, so I didn't need to use a hard money lender at that point. But that kind of deal could have easily worked. So those are the three that I would definitely use it for. But I have used hard money lenders in my business. They have helped me a lot. I think there's another tool to definitely grow your business. I use them from time to time, and they're a great asset. So I hope this information has really helped you. If you got questions about how do you work with a hard money lender, make sure you drop them in the comment section. If you haven't done so already, make sure you hit that subscribe button. Make sure you hit that like button. Make sure you hit that share button. You can hear and see this video. Thank you so much for tuning in today. God bless. Pray nothing but the best for you and your family as you build that legacy for your children and your children's children. Can't wait to see you again soon.